Welcome to Xero Hero, a short video blog from HBA Encompass aimed to make your Xero journey easier. Please note that all the slides today have been created from existing Xero training videos. Xero has rapidly changed in the past few years, so sometimes the pictures are using old screenshots or overseas versions. Where possible, each session is followed up by a live video demonstration. If you have any queries regarding any content delivered today, feel free to contact me via email victoria@hbaencompass.com.au or phone 0754 44 7094. Welcome to Payroll Settings. I'm sorry, but this is a long one. So the wages payable account here, the wages payable payroll, 804 is the standard Xero account for this if you use Xero set of accounts. And when you actually pay your wages expense or code your bank statement, that you should code the wages back against this payroll liability account rather than to wages paid, because otherwise what happens is that the pay run puts an expense in wages and then you put the payment to wages and you're doubling up your wages, which needs to be fixed later on. You can also use the payroll tracking categories. So we spoke a couple of weeks ago about the different categories that you can have within Xero to track things, and if you want your wages to be split between the categories, you can do. Also, they want to know how many days in your payroll year. Now, it sounds a bit bizarre. Do I have 365 days or 364 days? Because we all know that a standard year is 365 or 366. And what it does is it's just telling payroll whether we work on a full year basis or whether we use on a weekly basis. When you're happy with that, we click on Save. Then we go across the tabs. So we've started on our general payroll settings. We go to our pay slips. So you can upload your logo there so that when your employees get your payslip, it's got a picture of your logo. And also on the payslip, you have the ability to show an annual salary or an employment basis. There's no requirement by law to show either of them, but if you want them to be on there, it's just a matter of ticking that box. Then we go across to pay items. Now, pay items are the actual pay rates for our employees. So generally, they come up with ordinary hours and overtime, which is exempt from super. You can put as many rates in here as you like. So if you have different types of employees with different awards, you can just add as many as you like to that just by clicking on the add an earnings rate at the bottom, at the top here, calling it what it is, clicking on the earnings type. The account will generally be wages. The rate type here will either be a rate per unit or a set rate, and then the types of units, whether it's hours or rates. You can click here whether it is included in PAYG withholding and whether it's exempt from super guarantee. So some allowances are not included for PAYG withholdings, and also things like your overtime or anything like that aren't included in your super guarantee payments, so you don't want to be paying 9.5% super on something that you don't need to. So when you're finished with that, we hit Save. So you can see here a bit more detail. We put the name, we click what it is, whether it's overtime earnings or ordinary times or an allowance. We put in the details. You can see here I mentioned before we can have a fixed amount, a multiple of their ordinary earnings rate, and a rate per unit. So perhaps if someone were to pay overtime, you could put that their multiple might be 1.5 times their ordinary rate or something like that, which is good for your annual public holidays and stuff like that, where you're paying a higher amount. The next one across in our pay items is deductions. So these are deductions that we're taking generally post-tax from the employee, but we can choose as to whether it reduces the PAYG or reduces the super guarantee. So the most common one there is an FBT deduction. If an employee's got a motor vehicle where you're taking out a set amount per week or per month for their private use of the vehicle. Other things that would go in there would be union deductions if you're paying union fees on behalf of your staff, or donations if you've got a a donation ability where they pay $5 or $2 per pay to a charity or something like that. Generally, most of these deductions, except for perhaps your FBT, don't reduce the PAYG or the super guarantee, which is levied on their wages. You can see here that we've got an example of social clubs. So you might have where they're putting $2 a week or $5 a week into their social club. We have no category here because the categories that are standard are workplace giving or union and association fees. And then we put the account. So what we would have is a liability account for those deductions that you're taking out of their wages, so that when you actually pay it, you can offset it, so you can track how much you owe the social club or how much you owe the union or whatever it happens to be. The next tab along is reimbursements. So that's generally where you're paying back a reimbursement to your staff. Most common are travel, which might be a mileage claim per kilometre if someone's used their own vehicle to go somewhere and you're reimbursing it. Could also be travel expenses that are incurred. If it's just a straight reimbursement of an expense, generally I would do that through the expense payments on the front page rather than putting it through here, because it shows up on the group certificate. Whereas if you've got motor vehicle that you're paying them back, you possibly would want it showing on the group certificate, because then when they go to do their tax return, it will show up. The next one here is leave. Now, there are standard leaves that are set up automatically. There's an annual leave and a carer's leave. There's also a carer's leave paid. So annual leave is your holiday pay. Carer's leave is old-fashioned sick leave. But these days, carer's leave can be used for a variety of uses. So I'm not going to go into the HR details of this because it's beyond the scope of today. But you can add other leaves in there. It's just a matter of putting the leave, the types, what your normal entitlement is. If there's a leave loading rate, so perhaps your holiday leave might have your 17.5% leave loading, whether it's paid and whether you want the balances shown on the pay slip. Once you've set up the pay items, we go in and set up the payroll calendar. Now you can set these up to be either weekly, fortnightly or monthly. Okay, you can set up as many calendars as you want, but in reality the more calendars you have, the more confusing it is. So you may have some staff that are paid weekly and some fortnightly, or some monthly. Sometimes businesses pay the directors monthly but the staff weekly. It's up to you how you want to set it up. It's just a matter of clicking on what you want to call it, clicking on the calendar type and putting in the start date. So the start date is the first day of the period. So if you pay from Monday to Sunday, then it will be the Monday of the first week that you put in there. And then the pay date is the day it's actually going to be paid. So if you work out your wages historically from Monday to Sunday and then you pay it on a Tuesday, then whatever the next Tuesday is would be the actual payment date that's set in there. And of course, we don't forget to hit save. Once we've done that, we need to set up a super fund. So the super fund there is whatever super funds that your staff are contributing to. So super choices means that staff can actually choose a super fund. If otherwise, you may have a default fund such as Sun Super or something like that. So every fund that they have, you need to click and add them before they can be added to staff. So if you get a new employee comes in that's got a new super fund, you'll need to go back into the settings and the superannuation settings to add it before you can set up their pay template. So that's something that's important to know, because quite often you'll be halfway through the pay template and go to click on super fund and go, why isn't it working? I can't find it. So we put the fund there, the fund name or their SPIN number, their employee number and the SPIN, employer number, sorry, and the SPIN. So we'll come back to that. We'll just go further through. The type of fund there, if you click down, there's regulated, I think there's APRA and there's self-managed. So if you've got staff or directors who have a self-managed super fund, you can add that there. It's not a problem. We type in the name. Like a lot of things in Xero, it'll pre-fill. If you type in AMP, it'll bring up a whole list of AMP supers, so it's important to make sure you've got the right fund. Your employer number is appropriate to you. And the SPIN number that's here is a super provider identifier number, I believe is the exact wording, and it has to do with super choices. But we're going to have to electronically provide information to super funds, which Xero has the ability to do, but you need to make sure you've got their SPIN number in there. So it should be on any documentation that comes from the super fund. If not, you should be able to call them and find it. Self-managed funds also do have a SPIN number as well, and it's up to the trustees to provide that to you. If they don't have one or look at you blankly when you mention it, then they need to speak to their accountant who can organise that one. Just a matter of going through and filling it all in. When you go through and hit the SPIN number, you can actually put the details in if it isn't included on the list, and it's just a matter of going through it and filling in the blanks, so to speak. My name's Victoria Berry. I'm one of the directors of HBA Encompass. So if you need to contact me, my email address is victoria@hbaencompass.com.au, or of course our phone number is 0754 44 7094. Thanks for listening.